Greetings, members one and all of the Salivation Nation. 5 reasons the drop in gold prices shouldn't worry investors. This is an article coming to us from Forbes magazine, but I disagree with the title because gold and silver are not investments. They are hedges. They are insurance policies against economic instability. We've covered that before. We may talk a little bit about it as we go through this, but let's take a look and see what Simon Constable, who is a contributor, says about the recent drop in gold and silver prices. What I referred to as a smackdown or a slapdown of gold and silver prices in my previous video on the topic. Gold prices took a hit at the end of last week, and it has some observers concerned. But the truth is, it shouldn't be worrying. Here's what you need to know. The price of bullion fell more than $20 a troy ounce between Thursday and Friday, hitting a low around $12.79. And by the way, as we look at the markets right now, it is about $12.79 again. It did go up a little bit, and it went right back down below $12.80. Silver also dropped pretty significantly, over 60 cents, I believe. But nonetheless, here's why gold investors should not worry, according to the author of this article. A 2% move in a day isn't much. And that is reflected also in some of the comments in that video, saying it was a smackdown. Well, it really wasn't. But the thing is I look at it as a mode of perspective. In other words, for us, that is a pretty big move for those of us who pay attention to the price daily. Or if you're about to make a purchase, it's a pretty big move. And it also is a testament to what is involved with the precious metals and the fact that they are safeguards. So that for us, 2% is a lot, but really it's not that much in the grand scheme compared to other investments out there. If the price fell that much every day for an extended period, then losses would quickly mount. But so far, we aren't there. And we still aren't there today. It's been relatively flat. Number 2, gold prices mostly move down when the dollar gains strength. And we also talked about that, and have talked about that many times. And it has been strong since January against the world's other leading currencies, such as the Japanese yen, the euro, and the British pound. When the dollar gains value, then expect gold prices to fall. Since late January, the value of the dollar index versus major currencies has risen by around 5%, according to data from the Federal Reserve Bank of St. Louis. Over the same time period, the price of gold dropped by approximately 6%, according to data from the London Bullion Market Association, supplemented with other market data. In other words, the upward movement in the value of the dollar is overwhelmingly responsible for the price moves. The relationship usually works vice versa as well. And of course, we know that. That is the major factor based off of the value of the dollar and the dollar index. How healthy the dollar is determines where the gold price will be. And again, understand that there is a difference between price and value. But in some cases, the correlation between the dollar index and the gold's price is an indicator of value. Number 3, when gold prices do poorly, then other investments tend to do well. For instance, over the last 2 decades, from 1980 through the year 2000, the price of bullion dropped from a high of $850 an ounce down to less than $300. In fact, I remember a specific day when I heard on the news that gold was surprisingly low at $252 an ounce. Meanwhile, the S&P 500 index rallied to more than 1,000%, not including dividends, according to data from Yahoo Finance, the more than 10-fold increase. It's quite fascinating indeed. And, again, you look at the dot-com bubble. They're in the late 90s, early 2000s. We saw a lot of booming business with the internet. Number 4, gold is still useful to own during times of market stress, something else we've covered extensively on this channel. That's true even though we aren't there now. During the 2008-2009 financial crisis, there were periods when certain securities couldn't be sold. An example of that is a market for auction rate securities, a type of bond. If you owned these notes during that period, then you couldn't sell them no matter how low a price you offered. However, the market for gold never dried up. There were always ready buyers for the metal or the futures. It should be evident that currently the securities markets are not stressed. Stocks are booming, and investors are happily trading bonds. So that is something that can never really be stressed enough. That gold and silver will never lose value, and it will always be an indicator of that insurance policy in times of economic hardship. Even when there's small hiccups in the market, the Dow drops, a couple hundred points, whatever, here and there. Normally, you do see gold and silver take a bump during those times. So I think that's something. All of these reasons are just further bolstered evidence and proof of how valuable and how validated we all are in holding these precious metals. Number 5, the fact that gold prices move up and down is one of the attractions for investors. And I'm not going to correct them here yet. Let's read this and see what it says before we talk about as an investment. Just like other investments, the price of gold changes from day to day. However, those price movements don't tend to correlate with the changes in the value of stocks or bonds. When share prices drop, then gold prices might move up or down or remain unchanged. The lack of correlation helps to diversify a portfolio. Better still, when looked at in combination with other investments, adding gold can reduce a portfolio's overall volatility. For investors, risk and volatility are the same thing. Lower volatility is tantamount to lower risk. And they're exactly right there. However, and there might be right as it being an investment if you play it in the short term. If you make short bets, then you can probably use gold as an investment. But in the long run, what it's really there for as money, as a hedge, it's just that. It doesn't pay dividends. It doesn't make you rich or anything like that. However, there's one aspect of this that we should look at, especially in terms of silver, but in some cases with gold too, as a commodity. That's right. Gold does have some use as a commodity, but silver especially does. As a commodity like pork bellies, orange juice, or any other thing out there, silver is something that could be invested. But I think if you're going to invest in it as a commodity, that might be a better way to go with ETFs. But if you're going to hold the physical as a hedge, then yeah, you grab it as a physical entity, and there it is as an investment or as a hedge against economic instability, as an insurance policy. So all of those 5 points remain true despite Friday's pullback. If you own gold and are worried that prices may drop, then think about what you purchased it in the first place and why you purchased it in the first place. Most veteran investors, quote unquote, say that they own it for one of the following reasons: to help with the portfolio diversification, or as a hedge against the declining value of paper money, or as insurance that you'll always be able to raise cash by selling some of the metal. And really, that's the bottom line. It's an insurance, it's a hedge. And that's why I tend to shy away from the term investment, because when people think of investment, they think of that which will make them money. And I don't see gold and silver as anything that will make you money. It's solely a preserver of wealth unless you hedge your bets with them as commodities. So I hope you enjoyed this video. What are your thoughts about Friday's dip? It's kind of honing level. Do you think it's going to go down even more? Do you think it's going to rebound quickly, like a previous video from another commentary piece that's saying that within the next 30 days we may see this thing really start to rise up? It's anyone's guess what's going to happen, but nonetheless, let's enjoy it. Let's hold fast. Let's hold true. Accumulate as we can. Take advantage of these dips if we can, and go from there. I would like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.